Hi folks, and welcome to Become Financially Independent. My name is Björn for those who don't know me, and my worst fears have become true. Because the Chinese government now also has BYD in its sights. But with further ado, let's see what happened and why it is important to us investors. So, BYD Semiconductor, a subsidiary of BYD, raised a three-digit million dollar amount from investors for the semiconductor unit last summer. The plan was to list BYD Semiconductor's shares on the Chi-Next board, which is a Nasdaq-like facility for technology companies on the Shenzhen Stock Exchange. BYD, supported by US investor Warren Buffett and the Berkshire Hathaway Fund as we know, had also submitted an application to the Hong Kong Stock Exchange for a spin-off. A listing on the Chi-Next board depends among other things on the approvals of the relevant authorities, including the China Securities Regulatory Commission, the CSRC, as well as the Shenzhen Stock Exchange, the SSE, and the Hong Kong Stock Exchange, HKSE. So, BYD's semiconductors business area includes development, production and sales of optoelectronic semiconductors, intelligent controllers ICs and related sensors technology. In addition, chip design, wafer production, assembly and testing as well as downstream applications belong to the business area of BYD chip unit. Key customers can be found in the automotive and consumer goods sectors. However, Chinese authorities are currently investing a law firm that helped prepare BYD Semiconductor's IPO. The newspaper Nikkei Asia reported last weekend. The plan of the Chinese technology group BYD to bring part of its semiconductor division onto the stock exchange has therefore been suspended to a current official investigation. The BYD company wanted to remain the majority shareholder of the BYD Semiconductor after the IPO with about 70%-ish. And the chip division emerged from the outsourced Shenzhen BYD Microelectronics Limited, which was renamed BYD Semiconductor in January 2021. I think I explained that in a prior video of mine. So, BYD Semiconductor is China's largest manufacturer of microcontroller chips for the automotive industry and wanted to raise at least 2.68 billion yuan, which is roughly $412 million, for the development of chips for cars with initial public offering IPO. But the China Securities Regulatory Commission is investing the law firm Beijing Tianhuan, which also advised companies such as Bilibili on their IPO. The reasons behind the latest investigation remains unknown. The Shenzhen Stock Exchange now must suspend the examination of the IPO plan of BYD Semiconductor and 10 other companies due to the current investigation by the authorities in Beijing. Whether the chip division will go public at all or how long it will be delayed remains completely unclear. BYD Semiconductor is in direct competition with foreign manufacturers such as Infineon Technologies AG from Germany and the Rome Company Limited from Japan. So, the government in Beijing is meanwhile taking a closer look at the planned IPOs of domestic companies. It doesn't matter where these take place. As we know, last year the IPO of the powerful financial technology group, the Ant Group, was called off at the last second by Jack Ma, a core holding of Alibaba Group Holdings Limited. So the Communist Party definitely does not fear examining companies that have only just gone public and urging them to reform, which can be seen impressively from the example of the ride-hailing platform Didi Global, which recently went public at the NYSE. And why that is so dramatic? Well, BYD's plan to publicize its chip unit comes at the time when the world is grappling with a serious chip supply crisis affecting a number of industries, and therefore to have some extra cash from going public would have helped to grow and to expand even more, as they are already financially supported by the well-known investors such as the Chinese smartphone manufacturer Xiaomi. Well, folks, as I stated in my video, China risk, Chinese stocks continue crashing, buy the dip or stay away, where I explained what are the risks in the investing in the Chinese market and why the CCP is now regulating so much the Chinese tech companies. With this news and now clearly the CCP attacking not only the big tech companies like Tencent, Alibaba, etc., and now entering the automotive industry and the chip industry, I am totally done with Chinese stocks. I mean, that cost BYD and investors right now a lot of money, and therefore I will hold my BYD positions, and only if there would be a huge drop I would invest more in BYD. But for the rest, I will not invest more in Chinese stocks. Even if that would mean I will cut my chances in making a lot of profit, I can support such despotism and the risks are too high for me. But let me know in the comments what you think about that the CCP has such power and can rule however they want. And if you will continue to invest in the Chinese market, that would be really interesting. That's it for today. I hope you liked the video, and if so, please give it a thumbs up. Have a great day, stay focused and don't get greedy. And see you next time.